Now, there's a major energy transition. A lot of the big oil companies are transitioning to green technology. I want to talk about why that transition is good for the smaller oil companies. I'm a small oil company, and we're going to talk about that, current oil prices and what have you. If you like this channel, if you're interested in oil and gas, please subscribe to my channel. If you're an investor, it's also a good reason to subscribe. Right now, WTI is trading at 41.74, Brent crude 44.12. The rig count is 312. That's an increase of 12 this week. Frac spread 130, weekly change 15. Currently producing 10.5 million barrels a day in the U.S. Why the energy transition will be fantastic for small companies. The COVID-19 pandemic has driven a major oil producers to invest in new technologies and renewable alternatives sooner than anticipated to keep up with the market trends. This shift to open up greater opportunities for small producers. Although the demand for oil has dropped in 2020, it is likely to pick up rapidly in some parts of the world over the next decade. For example, the Asia Pacific region could see a demand increase of 25% by 2040 compared to the 2019 predictions. However, this demand could shift away from the world's top oil importer, China, to the Southeast other giant, India. India's demand is set to increase by as much as 5.8 million barrels per day by 2040, according to the 2018 OPEC report. So it's very clear that whatever we lost from the pandemic and from green tech, we're going to gain it back from the emerging markets from India. I mean, a lot of these countries haven't even started growing yet. We only have 300 million people, and we consume more oil than most of these larger countries, okay? And so they haven't even started yet. We're going to see, and look, the only thing they want to tell you, they want to paint the picture of doom and gloom. Oil and gas industry is falling apart. Yes, for the shale, the fracking industry, yes, because it's the most expensive barrel of oil to produce in the world. But the agenda is for Saudi Arabia, Russia, OPEC Plus to be back in control, in controlling oil prices. And they can't do that as long as the fracking industry is in full tilt production. OPEC Plus expects oil market deficit next year. If the cuts are extended until, here's the deal. They're looking at all the data and they're trying to keep oil production in a deficit, meaning we're consuming more oil than we are producing. And so their decision to extend the cuts. When I say cuts, they're OPEC Plus is OPEC plus Russia. They all have a decision to make whether to increase the extension of curbing production until June or not. Okay. But if the cuts are extended until the end of June, the total supply will be just under 21 million barrels higher than the 5-year average. These figures translate into a daily supply deficit of 900,000 to 1.4 million. And personally, I think, and this is all predicated if COVID continues and the demand continues to decline or maintain where we're at. Asian crude demand gives oil markets hope. New import quotas for independent refiners in China and strengthening fuel demand in India have all combined to create a bidding war for crude grades. So there's an increase of oil demand in China and India, and it's only going to increase. Look, oil and gas is unconventional when it comes to prices. Okay, for the OPEC has manipulated oil prices for a long time. Russia has manipulated oil prices for years. Okay, they are trying to regain the control to balance the oil markets like they were able to do under the Bush administration. The reason why they could do it then is because U.S. America was only producing 6 million barrels a day. We went from 6 million a day. Then all of a sudden we had the fracking boom, the shale revolution, and that caused oil prices to drop tremendously. And we went from producing 6 million barrels a day to 13 million barrels a day by 2019. Okay. And so because of that, it took Russia and Saudi Arabia and OPEC Plus out of the game. they're not able to control oil prices. So it comes down to control. So I'm here to tell you right now, it doesn't matter who's in office. Doesn't matter if it's Biden. Doesn't matter if it's Trump. It doesn't matter who's in office. It doesn't matter what happens to the markets, COVID-19. They are going to do whatever it takes to control the markets because it's unconventionally controlled. It's not just based upon simplistic supply and demand. It's purely based upon what they're willing to do to get the barrel of oil to where they want it to go. And right now, they're trying to cause shale, the conventional oil industry, unconventional oil industry, to get out of the game so they can rebalance the markets and have control again. So at the end of the day, it comes down to what Russia and Saudi Arabia are going to do, okay? And so once this COVID ends, once either Biden gets in office or whatever happens with that, you're going to see a major swing in oil prices in the right direction. But now, during this time when oil prices are low, I'm getting into good leases. We just hit a well the other day. We encountered a zone that can produce upwards of 500 barrels a day. So if you're interested in learning more, right now is the time to get involved in oil and gas, okay? Oil prices are still low, okay? Drilling costs are down. You're getting a much bigger piece of the pie than you normally would, where instead of getting 56 to 75% net revenue, you're getting 80%. Lease acquisitions are cheaper. Drilling costs are down. We're drilling wells for $600,000 a pop versus what they were in 2005 for $800,000. 2008, they're much higher. Okay, so right now everything's lower. This is the time to develop. This is the time to do lease acquisition. Premium leases are much easier to come by compared to the way it was back in 2008. Big oil companies are going to green tech. You've got a lot of companies that are folding because of these lower prices. And most of these companies, even though they're on good leases, they can't raise a dime because the fundamentals of raising capital has completely changed. The bankers, the institutional funding, all of these major funders of oil and gas completely pulled out. Why? Because they put their money in a losing proposition, which is unconventional oil. The fracking game, they lost their butts. So what do? They pull out of oil, okay? Where conventional oil, which is where I focus on, is still profitable. It's profitable because we're not spending $10 to $20 million to drill a well because a frack is very expensive. We're still developing at the same prices when oil prices were $20 a barrel. So it's very economical right now. I'm Sean Pruitt, president of Kingdom Exploration. If you wish to learn more, my contact information is in the description below. And if you like this channel, please subscribe. Thanks.